Is it worth buying Shift Technologies stocks in 2022, right now or anytime later? And will the company survive and ever become profitable? Shift Technologies is an online platform that enables its users to find, compare, and purchase or sell cars. That's a young company that was founded in 2013, incorporated in 2014, and launched its first market of San Francisco in 2015. The company acquires cars outright and reselling them on its platform direct to buyers, removing the peer-to-peer consignment model. It facilitates test drives, financial options, inspections, etc. After acquiring a car, the company inspects and repairs it through its regional reconditioning centers. And then the company lists cars on the website where people can purchase the car online. And the Shift seems to have better customers' reviews than the company's competitors, Carvana and Vroom. And now here comes the most interesting part. The company has shown triple-digit revenue growth, probably the most insane revenue growth I've ever seen. Car prices have been on the rise for more than a year as the pandemic disrupted supply chains and caused shortages of critical automotive components such as semiconductors, resulting in no new cars hitting the market. Used cars prices have grown even more, and car production still remains below pre-pandemic levels. The situation will definitely normalize sooner or later, but despite this used cars prices hike, the company had a negative operating income, as well as the company's main competitors Carvana and Vroom. All of these companies are unprofitable and never had positive operating cash flows. And this is basically the main risk. Will this company ever have positive cash flows? According to the forecasts, Shift Technologies will definitely not become profitable in the next few years. But yes, revenue growth will still be crazy. However, Carvana predicts that the company will become profitable in 2024. These forecasts often don't match reality, so only time will tell. We know one company that was unprofitable for many years and then achieved positive cash flows, but it's completely different situation. There was a company called PP that existed until 2016. That was also an online marketplace for used cars. It had different peer-to-peer business model, but the company no longer exists because of mismanagement of funds. So in any case, Shift Technologies needs funds to survive years until it becomes profitable, if it ever does. Carvana gathered large debt and also earned money by creating stocks and selling them, which is gonna be challenge for Shift because the company's market capitalization is only $220 million. Creating stocks and selling them won't give much funding, at least right now, because everything can change. And speaking of market capitalization, let's look at the stock indicators now. Price to sales 0.4 and price to cash 0.9, which means the company costs less than the cash company owns. Well, the valuation is nice, but debt to equity ratio is 1.7, which is high already. Conclusion. Well, the stock is definitely for people with high risk appetite, and whether you should buy it or not completely depends on your risk tolerance. What definitely you shouldn't do is invest in more than you can afford to lose. And that's all. Thank you for listening.